Attention nonprofit EDs and board members. How do you avoid making catastrophic end-of-year bookkeeping mistakes? Ones that could cost you grants, credibility, or even your tax-exempt status. I'm Christopher Aker, nonprofit bookkeeping expert at Yellow Jacket Bookkeeping. I help nonprofit EDs and working boards turn their bookkeeping chaos into clarity by handling cleanups, catch-ups, audit prep, and ongoing services so you have peace of mind and bookkeeping confidence. In this video, I'm going to show you how to avoid the 10 biggest year-end bookkeeping mistakes I see nonprofits make. You already know year-end is high-stakes season for nonprofits. It's when funders ask for reports, the board wants clarity, and the IRS expects accuracy. But I see so many nonprofit leaders scramble to get audit ready, and that's where mistakes and errors can cause real headaches. All right, let's jump into the top 10 year-end bookkeeping mistakes I see nonprofits make and how you can avoid them. Mistake number 1 is skipping bank reconciliations. This one might seem small, but it's a big deal. A lot of nonprofit leaders assume, well, QuickBooks shows my balance, so it must be good, right? Not necessarily. If you're not reconciling your books to your bank and credit card statements every single month, you could be missing transactions, duplicates, errors, or even fraud. And trust me, year-end is not the time to find out your numbers don't line up. Here's the fix. Make bank reconciliations a monthly habit. It's way easier to catch and correct small issues along the way than to try and clean up a mess at the end of the year. Mistake number 2, ignoring restricted funds. This one can really hurt your credibility with funders and put you in hot water if you're ever audited. Restricted donations are ones that come with strings attached, like this is for your scholarship fund, or use this to buy supplies for the food pantry. If you just lump these into your general income and spend them on other things, even unintentionally, you're breaking trust and possibly the law. So what should you do? Track restricted funds separately. In QuickBooks Online, that could mean using classes, or better, projects. That way, you can clearly show how each donation was used as intended. Funders love that kind of transparency, and your board will too. Mistake number 3, lumping all income together. This is another one I see all the time. Just one big category for income that includes grants, program revenue, events, and donations. It's like trying to budget with a mystery soup of money. But here's the thing. Different types of income matter to different stakeholders. Funders want to know where your money's coming from and how stable your funding sources are. The board wants clarity. And your accountant? They just want things clean and accurate. So here's the fix. Break it out. Use separate accounts for each income stream. That way, you can tell a clearer story about how your organization is funded and how you're using those funds to drive your mission. Mistake number 4 is not closing the books properly. Now, this one's sneaky. It's easy to assume that once the last transaction's in, you're done. But year-end is not just another month. If you're leaving the books open, making last-minute entries without a review, or not locking down the period, it leaves room for errors, adjustments that get missed, or changes after the fact. Here's what to do instead. Perform a formal year-end close. Review your balances, lock prior periods, and document any final entries. This ensures you're protecting the integrity of your financials, especially if an audit or grant review is coming up. Mistake number 5 is misclassifying expenses. Have you ever seen a budget report where half the spending is listed under miscellaneous? Yeah, that's a problem. When expenses aren't categorized properly, it's hard to make sense of where the money is actually going. And it can make grant reporting or board presentations really confusing. Not to mention, You won't look credible or on top of things. The fix here is simple, but powerful. Use a clean chart of accounts and stick to it. Make sure staff and bookkeepers are on the same page. The more consistent your categories, the more useful your reports will be. It takes discipline and organization. So stick to your chart of accounts and lock down an internal process to make sure everyone who touches the books is on the same page. Or better yet, outsource your books to an expert bookkeeper like me to do the data for you. Mistake number 6 is overlooking payroll liabilities. Payroll can be tricky. I see organizations forget to account for things like accrued vacation or bonuses or even payroll taxes. Those things add up fast, and if they're not recorded properly, it can throw off your books. Here's the fix. Before year end, record any outstanding payroll liabilities. That includes things like PTO earned but not taken, taxes owed, and any year-end bonuses. While you're at it, double-check your W-2s and 1099s to make sure they're accurate and ready to go too. Mistake number 7 is not reviewing budget versus actual. This one's all about flying blind. If you're not comparing what you plan to spend with what you actually spent, it's hard to make good decisions and even harder to explain results to your board or funders. The fix is to run a budget versus actual report. Look at where you were, over or under. Ask why. Those insights can help you adjust next year. They'll help you strengthen your case for funding and show your board and stakeholders that you're on top of things. Mistake number 8 is forgetting to prepare for the 990. Your accountant will need a ton of info for your annual Form 990 filing. If you're scrambling to find documents or track down board minutes or explain big variances, you're adding stress that could have been avoided. So here's the smarter move. Start gathering your 990 package now. And that includes financial statements, reconciliations, grant documentation, and board meeting minutes. It's all about being audit ready before the accountant even asks. Mistake number 9 is failing to document in-kind donations. Non-cash contributions like donated services or materials often go completely unrecorded, and that's a huge missed opportunity. Funders love seeing how you stretch your resources, and from an accounting perspective, in-kind donations are still valuable and reportable assets. Here's what to do instead. Set up a process to record and document all in-kind donations. That might mean logging volunteer hours, capturing fair market value of donated items, and keeping supporting documentation. Mistake number 10 is waiting too long to ask for help. Look, I get it. As a nonprofit leader, you wear hundreds of hats, and you feel like you're putting fires out all day long. But I've seen organizations wait until right before an audit or a grant deadline to clean up their books. And by then, it's panic mode, and all the mistakes I just listed are hard to avoid. So here's the fix. Ask for help sooner. If your books feel overwhelming or unclear, don't try to tackle it alone. A nonprofit bookkeeping expert like me can help you spot red flags early, clean things up, and make sure that you're ready when it counts. Not to mention, give you confidence in your leadership role and help you look organized and on top of things in your board meetings. So whether you inherited a mess or you haven't addressed underlying issues, now is the time to raise your hand and ask for help. If you want to make sure you're on track, let's talk. Reach out and schedule a diagnostic review of your nonprofit's financials. We'll help you identify mistakes, clean up your books, and face year-end with clarity and confidence, so you can get back to focusing on your mission. It all starts with a free call now to assess your needs, so visit our website now to schedule, yellowjacketbookkeeping.com. There's also a link below the video. I look forward to hearing from you.